Well, good afternoon. This is the Stock Watch for the Philippine Mining Club. And the first question we wish to tackle is whether the economy is stable and growing. If yes, then we are in good shape. By economy, we're referring principally to the economic output, the gross domestic product, all goods and services produced within the Philippines. And that can be measured by the $262 billion of economic output in 2012, which moved up to 349 billion by 2021. And that red line up there is equivalent to 4.6% per year. We are thinking that there's a dip in 2020 and 2022 because of worldwide disturbances. But then I think that the yellow line will show you the trend for the next 4 years. It will be a rocky upward movement. Now, as for the value of Philippine stocks, is it trending upwards or downwards? If it's moving up, then it means that investors are confident about the future. So to calculate the value of the stock market, we multiply the stock price times the number of shares, and then you get the market capitalization or market cap. Now, it's admittedly down. Stocks have been in the red for the past 2 years. And recently, it went down from 300 billion of market cap to 260. The top 30 biggest stocks are members of the PSE index. An index number is something that starts at 100 and then it's monitored over time. Right now, it's 6,000 points. So we did have some progress from the year 2000 when the index was at 2,000 points, and then it stayed below average until 2010, and then it went above average in 2015 to 20, below average from 2020 to the present, and I'm hoping that at some point in the future it will go above average again when conditions improve. So from 2,000 points, this index reached 6,000 points. It tripled in 12 years, 22 years, and then uh, I seem I see that it remains within the two blue lines. 95 to 99% of the data remains within the two blue lines. And I'm thinking that from this point on, I don't see it going any lower, but rather because of the force of statistics, then it's likely that it will remain above that lower blue line. And if conditions improve, then you can see the index moving following this green line to touch the upper blue line. The yellow line is between 8,000 and 9,000, and the green line is between 10 and 12,000 on the index. So by end of this year, we might hit 7,300 and hoping for 8,000 by end of next year, 2023. To be driven by the following good stocks. See the trend and the channel. The good stocks recommended by First Metro Securities would be SM Prime Holdings, Ayala Land, Robinson's Land, Banco de Oro, BPI Security Bank, SM Investments, Robinson's Retail, Jollibee Foods, by also Converge, Tel or PLDT, Mega World, Pure Gold, URC, CNPF, and Wilcon Depot. Buy these stocks now and hold on to them until they reach these target prices. Now, we were studying the economy moving gently upwards and also the stock market down in the last 2 years, but up since the last 12 years. We noticed that, of course, if the economy moves up, then the stock market tends to follow, and they maintain a ratio between the two of them. Even when the economy moves down and the stock market follows downwards, they also still maintain some sort of ratio. And this is true of every country in the world. There's a ratio that you can track over time. Collect the data, and then you will see that it has a range. There's an average number, there's a high level, or above average, and then there's a low level or below average. If it's high level, it's overpriced. If it's low level, it's underpriced as the stock market as a whole. So where's the Philippines? It's at 70 to 90 of stock market dollars compared to every 100 of economy dollars. That's below average. Some countries are strong and resilient, and the ratio is 120 to 300. And then some countries have a lot of worry, they have a lot of bad news, and they're below 70. So let's take a look. The on top of the world are Taiwan, 259 stock market dollars for every 100 economy dollars. And for Switzerland, 251, Sweden, 227, USA, 195, Singapore, 168. Now, at the bottom would be New Zealand, Germany, with its energy worries, Indonesia, Italy, Ireland, and Mexico. Their stock market size is a fraction of GDP size. Somewhere in the middle, not so bad. Thailand at 120, Australia at 119, the UK at 106, with its recent revolving door of prime ministers. Norway 93, Philippines 93, Spain 89. Our ratio of 93 for every $100 of economy is recent. In 2020, it was 88. I think we fluctuate between 100 and 80. The lowest and the worst was back in 1985. And this number just fluctuates up and down, so it helps you to monitor the whether stock market value is too high or too low in relation to the economy. I thank Warren Buffett for this indicator, market cap to GDP ratio. So, in summary, in the recent past, this stock market has been down 2 years, and the economy looks weak because it's suffering from internal and external shocks. But then, overall, take a long term view, the stock market is still good, and the economy has still been producing 4.6% in real growth per year. So, keep up the good work. Philippine Mining Club, things will improve. I work for Carilion Partners as a director, and I'm a financial consultant for First Metro Securities. Thank you, everyone, for your kind attention.